Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
There are positive earnings trends on a couple of top tech companies that we're going to talk about here with Shiraz Mian and Eric Dutram. They've got their eye on these two well-known companies. Shiraz, we'll start with you. Adobe.
That's right.
Incorporated.
Yeah. Adobe reported results already for the calendar third quarter. They beat on the top and bottom lines, guided higher. I have liked Adobe for the last few years for a number of reasons. Two most important, the number one being that of the growth areas, of the happening areas in the broader tech space, one is cloud computing. And I've strongly felt that Adobe, of all the other cloud plays we have, is one of the more compelling cloud plays in the long run. And the second major reason is the Adobe as an indirect play on the proliferation of the iPhones, the smartphones, all of these as devices. And the reason I'm saying as an indirect play on that trend is that as these devices have become popular and consumers are more and more consuming content online on handheld devices, it has produced this problem for companies of how to access and reach those customers in the marketing sense. And I was reading an analyst report who referred to Adobe as the arms dealer, a very happening and popular arms dealer for many of those companies to have the marketing tools and skills to reach those folks. So as a cloud play, as a play on the proliferation of handheld devices, Adobe is an excellent software company. They have been in a business transition since 2012 when they decided to move away from the licensed box software that you have to renew year after year and then maintain it to this subscription model. And of the latest quarter, roughly 70% of revenue is now subscription. The annualized recurring revenue as of the third quarter was about $1 billion higher than when they started their transition. And very strong growth in both areas. They guided higher. As I mentioned earlier, the stock really spiked in response to that result, but management was going out of its way to temper expectations. They don't try to extrapolate the revenue and margin gains that we had in the September quarter into the future periods because they're hiring more sales guys and spending more on the business, but I think for folks who are looking for a quality software company that has a good business in the cloud and, as I mentioned, in the smartphone, smart device space, they should keep Adobe in picture. It's a Zanks Rank 2 stocks. Estimates have been going up after the earnings announcement. They have an amazing balance sheet. More than $4 billion in cash, less than half of that in debt. They produce a ton of recurring cash, have very little in terms of recurring capex needs. So it's still in a growth mode. I would expect them to keep spending their free cash flow on strengthening both of their platforms, the digital media and the digital marketing. About 2/3 of revenue comes from digital media, about 1/3 from digital marketing. So they'll keep making those tuck-in acquisitions to strengthen both of those platforms, but a very, very strong franchise for the long run.
All right, Eric, Seagate Technologies, your pick.
Yeah, and you know what? This is also a Zacks Rank number 2 stock. It has a B VGM score.
Right.
But the real thing to note about this company is that it just pre-announced earnings, and this is actually the second time in a row they've had a positive pre-announcement. So the news has just been so great that they can't wait to get it out. They can't wait till the earnings report to get it out.
Sure.
And actually, we've seen estimates, or we see the stock actually move lower following the pre-announcement, even though it was a positive release. But if we look to analyst estimates, these have actually been pretty positive. So you get a nice situation here where it could be a little bit of a value play for investors, at least if we look to the recent estimate trend. As we can see right here, in the current quarter, in the last 7 days, 9 estimates have gone higher for Seagate and 9 for the current year, as well as 6 higher for next year. The magnitude of these estimates has also been really impressive. I mean, look at this. 90 days ago, they were expected to have just 54 cents a share, and now it's up to 89. And current year, 246 90 days ago, and 330 right now. So a very positive overall trend for Seagate. And if we do look to the estimates in terms of the most recent ones and what we like to call the most accurate estimate, we can see an even more positive trend. The earnings ESP right now is 3.4% for the current quarter, and for the current year, about 5.5%. And so once again, the most accurate estimate right here, $3.48, and that is almost a $1 increase from 90 days ago for the current year. So really, overall, a really great situation, and considering that the stock has moved down a little bit in the last week following the pre-announcement, I think this is a great opportunity to buy on the dip.
You think that's going to be a habit for them to pre-announce going forward?
It's starting to be a habit. I mean, we'll have to see if they do it again next quarter. But hey, if they're going to keep, posting positive pre-announcements,
Sure.
Might as well keep it up. Yeah.
Right? Okay. Either of you own your stocks?
No, we don't.
Do not.
All right. Check out more stock information on our website. That's Zacks.com. If you're not there already watching this video, get on over. You can link to top stock picks, other stock picks, and commentary, as well as stock picking strategies, all off the homepage at Zacks.com. With Shiraz and Eric, I'm Terry Ruffalo.